The most valuable private company in history has never had a single outside shareholder. Every rocket that has ever launched, every satellite now orbiting above your head, every blueprint for a permanent human colony on Mars, all of it built entirely on private money. That is about to change.
SpaceX is the world's most valuable private company, worth more than the GDP of countries like Finland and Chile.
SpaceX is moving toward what analysts are calling the most anticipated initial public offering in the history of modern finance. And the moment it happens, the ripple effects will not stop at Wall Street. To understand why this matters, not just financially, but for the future of human civilization in space, you have to understand what SpaceX actually is. Not what it says it is, what it has actually built. It started in 2002. Elon Musk had just sold PayPal and walked away with $180 million. He took $100 million of that and poured it into a rocket company with no rockets, no launch contracts, and no customers. The idea was simple: delusional. By almost every conventional measure, make humanity multi-planetary. Not as a philosophical thought experiment, as an actual engineering mission with a deadline. The first 3 launches failed. The company burned through capital faster than anyone expected. Musk liquidated personal assets to keep it alive. By mid-2008, SpaceX was within weeks of insolvency. Then, on the 4th attempt, Falcon 9 reached orbit. That single successful launch changed the trajectory of everything that followed. SpaceX moved faster than any space company in history. Falcon 9, the Dragon capsule, NASA commercial crew contracts, and then, the moment that redefined what aerospace engineering even meant, the first orbital rocket booster to land itself upright on a drone ship in the middle of the ocean and fly again. Engineers at legacy aerospace companies said it could not be done economically. SpaceX made it routine. By the mid-2020s, SpaceX was launching more mass to orbit than every other nation and company on Earth combined. It had built a dominant market position that no competitor could challenge on cost or cadence. But here's the thing that changes everything. When you think about what an IPO actually means for this company, most people, when they hear SpaceX going public, think they are considering an investment in a rocket company. They are not primarily. The real SpaceX is a satellite internet company that also happens to own the most capable, most cost-efficient rocket fleet in the history of spaceflight. Starlink, more than 6,000 satellites in low Earth orbit, with thousands more planned, deployed across over 100 countries, serving millions of subscribers who previously had no access to reliable broadband at all, generating billions of dollars in annual recurring revenue, growing quarter over quarter with no sign of deceleration. Here is why this matters for the IPO calculation. Starlink is a subscription business. It is predictable, it is scalable, it has pricing power, it has expanding demand on every continent. That is precisely the kind of business that public market investors will pay enormous multiples to own. When analysts estimate SpaceX's total valuation, numbers that have reached and exceeded $350 billion, they are mostly estimating what Starlink is worth. The rockets are the competitive moat that protects Starlink from challengers. Starlink is the revenue engine that funds everything else, including Starship and beyond Starship, Mars. And Starlink is not standing still. Direct-to-cell connectivity is coming. The ability to connect any standard mobile device, anywhere on Earth, without a special antenna. Maritime and aviation markets are expanding. Military and intelligence contracts are growing. AI-powered network optimization is increasing efficiency and coverage simultaneously. There are approximately 4 billion people on Earth without reliable broadband access. Starlink is engineered to reach every single one of them. At full penetration, this is not a multi-billion-dollar revenue business. It is a multi-hundred-billion-dollar opportunity. SpaceX also holds a near $3 billion NASA contract to land American astronauts on the moon as part of the Artemis program. It runs the National Security Launch Manifest for the United States government. Its Falcon 9 rocket has achieved the most successful operational track record of any orbital launch vehicle in history. This is not a startup betting on unproven technology. It is a vertically integrated space infrastructure company with diversified government and commercial revenue, protected by proprietary technology that no competitor can replicate at comparable cost. And that is precisely what makes the decision to go public so complicated. Because here is what Musk has stated repeatedly, publicly, on record. He does not want SpaceX to become a public company, not because the business is not ready, because he believes the mission is structurally incompatible with quarterly earnings accountability. Mars is a multi-decade engineering project, possibly a century-long civilizational commitment. It requires sustained capital deployment with no predictable financial return on any conventional investment timeline. Public markets are built for quarters, for annual guidance, certainly not for missions that may not reach financial self-sufficiency for 50 years. Consider what public ownership actually introduces. Institutional shareholders file engagement letters. Activist investors can build positions and demand strategic pivots. Board members carry fiduciary obligations to act in shareholders' financial interest. Quarterly earnings calls create pressure that compounds with every reporting cycle. These pressures are not catastrophic for most businesses, but for a company whose stated purpose is to establish a self-sustaining human presence on Mars, they represent a constant friction against the mission. If this is changing how you see SpaceX, hit subscribe. We go this deep on every story that is reshaping the future. So why is it happening anyway? Because of something that no amount of private fundraising can solve at the scale required. Call it the funding wall. Building a self-sustaining Mars city is not a billion-dollar problem. It is not a $10 billion problem. Credible engineering analyses place the total capital requirement somewhere between $100 billion and several trillion dollars over the course of decades. SpaceX's private fundraising has been extraordinary by any historical standard, but the pool of private capital available to any single company, regardless of its profile, is fundamentally limited. The amount of capital available in global public equity markets is not. Going public is not a retreat from the mission. At this scale of ambition, it might be the only viable path to fund it. Here is how the structure could work while preserving control. The mechanism is called a dual-class share structure. It is not unusual. It is the same structure used by Google at its 2004 IPO, by Facebook in 2012, by dozens of founder-led technology companies that needed public capital without surrendering strategic control. Class A shares, sold to public investors, carry 1 vote per share. Class B shares, retained by founders and insiders, carry 10 votes or 20. The company goes public. Hundreds of billions of dollars flow in from institutional investors, and the founding team retains effective control of every major strategic decision, including Mars. The money arrives, the mission continues. But here is the paradox that makes this unlike any IPO in living memory. Even with dual-class shares, even with voting control, the moment SpaceX is a public company, the culture shifts. Not immediately, not catastrophically, but measurably. Analysts publish quarterly earnings notes. Financial media debates the stock price on television. Institutional shareholders write governance letters. 100 small pressures accumulate simultaneously, all pointing in the same direction. Quarterly results, shareholder returns, margin expansion, near-term capital efficiency. For most companies, this is healthy discipline. For a company trying to permanently establish human civilization on another planet, a mission that will run at structural loss for decades, it is a gravitational force pulling continuously toward Earth. The question is not whether SpaceX survives going public. The question is whether the mission survives going public. And then there is the scenario that resolves the paradox entirely. If Starlink reaches 100 million subscribers, if it captures meaningful share of maritime, aviation, military, and direct-to-cell markets, if those revenue streams compound as the network expands, annual revenue from Starlink alone could reach into the hundreds of billions of dollars. At that scale, SpaceX does not need public investors to fund Mars. It funds Mars itself, out of operating cash flow, without being constrained by shareholder expectations for capital allocation. The public market becomes the mechanism not for funding Mars directly, but for capitalizing Starlink, which then generates the cash flows that fund Mars. The stock market becomes the fuel. The cosmos becomes the destination. Here is the deepest truth about what makes this moment historically unprecedented. When Amazon went public in 1997, it was a bookstore trying to scale. When Google went public in 2004, it was an advertising platform. When Facebook went public in 2012, it was a social network. SpaceX is going public as a company with an explicit, legally stated mission to make the human species multi-planetary, not a tagline, not a vision statement, the founding purpose of the organization. No company in the history of public financial markets has ever gone public with a 100-year civilizational mission as its primary stated objective. What happens next will determine whether a publicly owned company can hold a mission like that together across decades, or whether the weight of quarterly expectations slowly, incrementally, bends it back toward Earth. SpaceX going public is not a financial story. It is a question about whether the architecture of capitalism can carry the weight of civilizational ambition, whether Mars gets built because of public shareholders or despite them. The answer depends on decisions being made in closed meetings by a small group of people who understand the full weight of what they are deciding. If you found this useful, hit subscribe. We post every week.